where is it going? It's probably going to 100, then 150, then 200,000. In what period? I don't know. 5 years, 10 years, but it's going there. And the reason is because every time you see all of this stuff happening, it just reminds you that, wow, our leaders are not as trustworthy and reliable as they used to be. And so just in case, we really do need to have some kind of, insurance we can keep under our pillow that gives us some access to an uncorrelated hedge. This is now the beginning of the new fiscal year for the entire mutual fund complex. So that's trillions of dollars that have to get deployed, because even though you pay them a very small fee per year, you're not paying them to hold cash. You're paying them to make decisions and own assets. And then, as you said, Friedberg, the last part of this is now you introduce rate cuts, and that's a real accelerant. Now, more than likely, I think what that means is that markets are set up to do pretty well, equity markets specifically. What is all of this saying? I think what it's kind of saying is inflation is very much in the rearview mirror. Rates are going to get cut by the middle part of the year. The economy looks like it's going to be a soft landing. That is actually very beneficial for the sitting president. It's also good for equities. It's good for us. So it's really interesting, actually. I think we've had a fundamental kind of now change.
Tech investor and billionaire Chamath Palihapitiya believes that Bitcoin is going to $100,000, then to $200,000 before going on to be worth $1 million per coin at some point in the next 20 years. Many know Chamath Palihapitiya from his time working at Facebook or as a prominent figure in Silicon Valley. What most people don't know is that Chamath was an extremely early investor into Bitcoin. He was introduced to Bitcoin in 2012, and between him and two close friends, at one point they owned 5% of the total Bitcoin supply. Chamath's average buy price was close to $100. In his latest All In podcast episode, Chamath broke down the current macro environment and why it's looking increasingly likely that the Fed is going to pull off a soft landing. This would be extremely bullish for assets further out on the risk curve, such as growth stocks, Bitcoin, and crypto. Make sure to stick around to the end of the video where we go over Chamath's latest 2 price predictions he's made for Bitcoin. Also guys, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top on-chain analysis all in a nutshell. Click the first link in the description to join over 25,000 others in becoming a better crypto investor right now. Now here's Chamath with his latest macro outlook.
I did a little tea leaf reading on macro if you guys wanted. I have some charts. I'm going to just give you a little rundown of, because I went and look, we used to talk about these things when we were doing a lot of forecasting going into this cycle. But so here's like a couple of really interesting observations. So the first one is, when you look at this M2 money supply, look how much it's actually shrunk. Now, why that's interesting to me is that you have these two forces that are opposing each other. One is we have these huge deficits. So we're technically still, frankly, issuing a lot of money, right? But then on the other side, we have QT. So when debt rolls off, we're not reissuing it. And the balance of that is still a really constructive thing where now you can see that, M2 has materially started to shrink. And I think that that's a really positive thing, because now what that does, it combats inflation in a good way. Unfortunately for all of us, it hurts financial assets, which is not so good. I think we've all felt that pain, but the reality is that that's been working. So then, Nick, if you go to the second chart, so what you see now is like we are in a really decent place with inflation. And if you think about what's going to happen over the next 6 months, it's mostly in the bag. And meaning, we talked about this before, but there's a lag effect on a handful of components, specifically rents, which when you roll them into this inflation rate, you're going to see it really, really turn over very quickly, right? So we know that inflation is falling. It's going to fall even more. The second thing, Nick, the third chart here is you can see that now validated in these 10-year break-evens. Remember, this was the chart we used to look at when we were like, holy mackerel, something's going to break. In November of 21, I think we probably should have just sold everything we had in November of 21. We didn't do it, but the point is now we know. And what you see here is the 10-year break-evens are also telling us, okay, guys, we're going to be in a pretty decent place. And so I think the setup is basically the following. there's less money in the system. That's a positive. Nick, if you show the last chart, there's more money on the sidelines. And this is just a picture of, look at the amount of money in money market funds. 6 trillion and growing. So that's a really positive sign, which is that money will need to find a home.
Once rates drop.
No, even just now, because you're gonna be in a situation where, and I'll get to this in a second, but companies are now starting to perform because they've been able to rebaseline against very, very lowered expectations.
Right. And money managers have to do their job and deploy capital.
And that's something we mentioned, I think, last week, but this is now the beginning of the new fiscal year for the entire mutual fund complex. So that's trillions of dollars that have to get deployed, because even though you pay them a very small fee per year, you're not paying them to hold cash. You're paying them to make decisions and own assets. And then, as you said, Friedberg, the last part of this is now you introduce rate cuts, and that's a real accelerant. Now, more than likely, I think what that means is that markets are set up to do pretty well, equity markets specifically. And so I went and I said, well, how can we see some data that proves that this is happening? And what's amazing is if you look at the performance of what I would call the most risk-adjusted seeking companies, so those are tech businesses that have been absolutely hammered, what you see in the last month is they have gone just nuclear. Adyen up 30% in a matter of a week. DoorDash is up, 25, 30% in a matter of a week. Datadog up 30% in a matter of a week. These are the businesses that were just completely decimated. So what is all of this saying? I think what it's kind of saying is inflation is very much in the rearview mirror. Rates are going to get cut by the middle part of the year. The economy looks like it's going to be a soft landing. That is actually very beneficial for the sitting president. It's also good for equities. It's good for us. So it's really interesting, actually. I think we've had a fundamental kind of now change.
So there's Chamath on why he believes the Fed may actually pull off a soft landing. The combination of interest rates about to be cut with trillions of dollars on the sidelines by money managers combines to create a perfect environment to send asset prices higher. What will benefit disproportionately from this? Bitcoin, especially with the spot ETFs coming in early 2024. Now, here's Chamath's predictions as to where he believes Bitcoin is going over the next few years and why every investor should put at least 1% of their portfolio into it.
Can you play the clip in 2012 and 13 when it was at 200 and everybody was laughing at me on CNBC every time I would talk about Bitcoin? Where is it going? It's probably going to 100, then 150, then 200,000. In what period? I don't know. 5 years, 10 years, but it's going there. And the reason is because every time you see all of this stuff happening, it just reminds you that, wow, our leaders are not as trustworthy and reliable as they used to be. And so just in case, we really do need to have some kind of, insurance we can keep under our pillow that gives us some access to an uncorrelated hedge. And it's going to eventually transition to something much more important. But for right now, you're just getting all these data points that prove this thing. It's just the fabric of society is frayed. And until we figure out how to make it better, it's time to just have a little schmuck insurance on the side. And everybody's running in. It's just an incredible thing. I could never have imagined it.
It is out of control. Look, let's
talk Bitcoin?
Let's talk Bitcoin. 2012, I was introduced to it. I started to accumulate. 2013, I wrote an article. And
so hold on, just so we know and can feel bad about ourselves, you're accumulating it at what price?
Well, my dollar cost average is around 100 and something.
And you've held it, everything you've bought?
Well, at one point, myself and so I was introduced to it by a person. I asked him if I could disclose his name. He said no. But he, myself, and another person, all three of us relatively well known in the Valley, we started, at one point we owned almost 5% of the entire float. In 2013, we've sold, they've sold, et cetera, et cetera. I wish we had kept it all. We didn't. It's fine. But then I wrote an article and I said, you know what? There's so much asymmetric upside here. This is a thing that either goes to, at the time I said, roughly the value of gold. And at the time, it was about $100 a coin. And so there's very little downside. There's all this asymmetric upside. I said, take 1% of your net worth and buy this schmuck insurance. And it's a schmuck insurance in this kind of very elegant, beautiful way.
I missed
That
it.
was at
I missed the
$100.
schmuck insurance.
That was at $100, though. What would you, I mean, I actually started hearing from people that I know very well who don't often invest, who are now asking me if this is the time to invest.
Buy the schmuck insurance now.
Here's the thing. This is now a confidence game, right? There is no real utility in this. This is a fantastic, fundamental hedge and store of value against autocratic regimes and banking infrastructure that we know is corrosive to how the world needs to work properly. You cannot have central banks infinitely printing currency. You cannot have folks with, misguided and misdirected monetary and fiscal policy. No. So here's what I would say. The same way that I said in 2013, put 1% of your net worth into Bitcoin, I will put myself out there today. I think this thing is $100,000 a coin, probably in the next 3 to 4 years. And I think it is, in the next 20 years, $1 million a coin. So there you have it. What I'm saying is you could buy the S&P 500 index, buy 99% of that. So if you have $100 to invest, what I'm saying is...
Put $1.
Put $1. And the reason that $1 is so valuable is that it is fundamentally not correlated to the other 99. And just on the off chance that all the people that manage the 99 may not totally know what they're doing, the $1 may actually save us.
So there's Chamath Palihapitiya's prediction for Bitcoin. Chamath's perspective, shaped by his early investment and deep understanding of the market dynamics, offers a unique lens through which we can view the potential trajectory of Bitcoin and other cryptocurrencies. Chamath believes that Bitcoin will climb to $100,000, then $200,000, and eventually hit $1 million per coin within the next 20 years. While these figures may seem optimistic, they are grounded in a thorough analysis of the current economic landscape and the evolving role of digital currencies. Furthermore, Chamath's insights into the possibility of the Federal Reserve achieving a soft landing and its implications for riskier assets, including Bitcoin and growth stocks, offer valuable food for thought for investors and enthusiasts alike. For those eager to stay at the forefront of the crypto and Bitcoin world, remember to subscribe to my daily 5-minute crypto newsletter. It's your go-to source for the latest expert predictions, breaking news, and top on-chain analysis, all condensed into a quick, informative read. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.